Hello everyone, good evening, welcome and thank you for attending. This is Yanko speaking, and this evening's webinar will be mainly on price action and how to trade naked charts or just the price. We'll add some maybe some lines, support and resistance lines, some trend lines, and later on maybe we'll add an indicator or two below the graph, but the chart will remain mostly naked, and we will just trade what we see on the chart, the price itself, the candles, the shape of the candles, some patterns, and we'll try to neutralize all other noises such as moving averages and Bollinger Bands or other things that you may put on your chart. I hope you can all hear me. So if you have any questions or if you have any problems, technical problems, you can't see the screen or anything, just let me know. I see here a question. Okay. Okay, Murali here is asking for a simple indicator because they lost a lot of money without without idea of, okay, or because you're a novice trader. All right, so again, we'll talk today about the basics, okay? Not even any simple indicators, just the basics of what you should be noticing, or what you should be looking for when you look at the price itself, okay, or the price movement. And actually we've had some serious price movements in the last hour or two, and the market keeps going down. It's just unbelievable how risk aversion is taking over again, and the euro and the pound have broken their previous lows. Okay, if we look here, even on the daily chart or the 4-hour chart, you can see here how the euro dollar and other currency pairs such as the pound dollar have broken their previous lows in the last few months. Okay, the lowest point in the last few months. We'll talk about it a little bit later. But again, let's start with talking about the price action itself, okay, the price itself. So obviously, as you know, price goes up and down according to demand and supply. Places where there's high demand or more demand than supply, prices will probably go up. Where there's more supply than demand, prices will go down. But you cannot, like, maybe banks, big brokerages know where there are major demands in supply. And supplies, you know, they know the supply and demand levels because they see the open trades, or they see the stop losses or take profits, or other trades that are currently I mean future trades, okay, pending orders. So these big trading agencies, okay, banks, etc., that know where the pending orders or other orders are found, they can tell, okay, where there's strong support or strong demand ahead of everyone. But we, as simple traders that do not see, or most of the time we cannot see these support and demand level, or these supply and demand levels, unless we have some special privileges like advanced trading platforms. If we don't know these levels and we have to count on the graph, in these cases what we need to do is analyze the charts and these support and resistance or supply and demand levels according to what has already been set on the graph. Okay, these supply and demand levels can be analyzed by looking at the chart and seeing where we had candles going up, okay, where we had the price starting to go up, and we mark these areas as supply areas, as demand areas, sorry, and places where the price started going down are supply areas, okay, the resistance areas where the price, where there were more sellers than buyers. Now, this is obviously the basic thing that everyone knows, okay, but what you should be adding to this equation of where the price started to go down or up is the shape of the candles. And later on, if you want, you can obviously add some indicators like for divergences or for momentum, okay? But first, let's look at some basic patterns and some and try to trade the charts only according to these patterns, okay? Now, obviously, like in every other strategy or every other method, it doesn't always work, and we'll soon just change to a 1 minute chart, okay, and see the price behavior on a 1 minute chart. But let's first look at several patterns, okay? So obviously you all know the double top or double bottom patterns, okay, areas, and of course these are areas again. These are not necessarily lines or very thin lines. These are areas where we may find support or resistance. They can of course be, the longer the graph, the wider they are, okay? If it's a 1 hour chart, they can be as wide as 10, 20 pips. If it's a 1 day chart, if it's a daily chart, they can be dozens of pips. If it's a weekly chart, it can be even hundreds of pips, okay? But these are areas, so you should always take that into consideration when you're setting your stop losses or take profits or pending orders. So again, you know that areas where there's strong support and are broken change into strong resistance, okay? Now this area here, okay, even if you didn't know that there was resistance here from a week or two ago, and obviously I remind you, you should always look left on the chart, but even if you didn't know, you can always say, okay, I see resistance here. I see resistance here, and either you enter short somewhere around here, or you say this resistance has been breached, and I'm looking for long. Okay, now this is an hourly chart, so waiting 1, 2, 3 hours will give you quite a good indication of whether the price is doing what you think it's supposed to do, or the market is going where you think it should go. In this case, of course, there was a false breakout, at least a false breakout of this recent high. Okay, and this is the first one of the let's say the basic examples of the basic patterns of price action. Either you have a perfect double top or a double bottom, and then you see a reversal candle. In this case, let's say the top was here, okay? Let's ignore this lower top here. Let's say the top was here, and you have a reversal pattern here, okay? A bullish candle, a reversal candle, which is this doji, and a bearish candle. This is a reversal pattern, and then you decide to go short, or even after this doji candle. This is obviously the classic pattern that you all know, but what happens if, for example, there was a breakout, okay? There was a breakout, and after this breakout, you see this hesitation candle, okay, or this reversal candle, and then this confirmation candle of the reversal pattern, okay? And again, I remind you, basically, if you look left, you will see that the resistance level or the support level was a bit higher, and obviously this is where you should draw the line. But again, if you missed this previous support area and you thought that this was the resistance and the resistance had been breached, in this case look how the price behaves after this false breakout. Okay, even if you entered this this bullish candle here that breached the previous high, you have doji, you have a reversal confirmation candle, and then 3 candles that close below this previous high. In this case, okay, if you entered long, obviously you should go out as soon as possible. Okay, you have at least 3 chances here in these 3 candles after the long candle. Okay, 1, 2, 3. But the pattern here, okay, or the price action here shows you I've been trying to breach. Okay, this was a false breakout. This was a fake attempt or a weak attempt. After this breakout, I tried to break back again. The buyers still managed to keep up, and then the sellers broke this resistance line again, and we have 3 candles closing below before we continue downwards. So you have here this area of a fake breakout or price action that shows you, okay, who is stronger. Okay, this is price action. You see the action here. You literally see the action, the war or the dynamics between the sellers and the buyers. And no matter how many indicators, moving averages, I don't know, colorful candles, all these things, Heikin Ashi, whatever you see would hide or would not give you a better realization or a better understanding of the action itself, of who's gaining power here, who's gaining control. And these candles here, okay, show you who's gaining control. So first we think the stronger part is the buyer side, okay, because they breached the previous high. But then we see hesitation, we see reversal patterns, we see candles closing again below the resistance level. This tells you sellers are still in power, and obviously if you move to the 4-hour chart, okay, again it depends on the closing time of the 4-hour candles, but I guess in some time zones, if the candles close 1 or 2 hours before or after, you will see this candle closing below this resistance area. But it doesn't matter. Again, sometimes we have false breakouts, and I guess in this case we also have divergence of some sort, maybe on the MACD. Well, okay, now the MACD here just is still negative, and the stochastic here, yeah, the stochastic gives us also divergence, but we'll talk about the divergences later. Okay, just as another, maybe another indication. But again, the price action itself is what matters. So first of all, look for resistance and support areas, and the best trades for you, and the safest trades with regards to risk-return rate, okay, or ratio. The risk-return ratio, the best areas are to look for these lines or these areas where support turns to resistance, or resistance becomes support. Okay, the action here, okay, is double, because these the traders who were here taking long for some reason, okay, in this area, traders who remained in their long positions now exit their long positions around here, around the resistance line, minimizing their losses. And traders who know that a strong support level has been broken and now may turn to a resistance area are looking also to go short. Okay, so we have buyers closing their long positions or selling, and sellers who are looking to go in and take short positions. So these are the best trades or the best areas, and you should look for these signals, these action, these candles that show you the action, that show you who's gaining control, who's in charge here, and how the price behaves. You don't have to enter at the first candle. Okay, you don't have to enter if you see hesitation. Okay, but once you see that one of the sides, the buyers or the sellers, gain control, and they're the ones who are now showing the way, you should try to look for. You should then go with the winners. Okay. Now, those who were hesitating for, weren't sure if it's going up or down, because these candles, are showing hesitation, obviously. And just like other traders are hesitating, you may be hesitating as well. And you may be thinking, okay, maybe it tried once, it's going down, maybe it'll try again, maybe eventually the buyers will gain control. So even if you were waiting and you saw here, okay, that there was some support area and it was going down and up and down and up and eventually broken again, you have another area here, another price action, another opportunity to go short again, okay? And we're talking about areas of 13, 15, 20 pips. This is not much. So it's not like I'm telling you wait and enter a bit lower or enter lower and you say, okay, but the stop loss now is 100 pips away. No, it's if you're working on an hourly chart or a 15-minute chart or a 5-minute chart and sometimes even a 4-hour chart, you will have other opportunities. You will have later opportunities to go in the market in safer areas. So you don't have to panic. You don't have to say, oh shoot, I lost my chance to go in. I lost my chance to make money. The market gives you another chance and another chance, and really patience is the trader's virtue. Okay, you have to be patient. And in this case, okay, those of you who are in Europe or Central Europe, East Europe, West Europe, doesn't matter, but somewhere around, or those of you who are in the Far East, for them, these hours, I mean, in the middle of the night here on the chart, for Europeans, maybe it's not the best time to go in. So here, the morning hours give you another chance, and again, there are these examples all over. Okay, you just have to be patient and just draw these lines. Don't be lazy. Don't be afraid to draw one line or two lines. And I'm telling you, sometimes I leave support and resistance lines for weeks. Sometimes I leave trend lines for weeks, and eventually I see the price react to these lines. So first pattern of price action is the reversal of the role reversal between support and resistance lines, and the shape of the candles, or the way the candles behave around these lines. Okay, so again, I remind you, if you see support and the support area, again, it's an area, so it doesn't have to be exactly on the wicks here. It's just the area where most candles broke the price, and I'm sure that if we or breach the price, and I'm sure that if we go a little bit backwards, well, that may be a little more than a little bit. Here you can see again these lines. Okay, you can see these lines again from January. Okay, so you can see here how the price found resistance, found support, and I'm sure it can go much backwards. Okay, so that's the first thing you should notice: support and resistance, changing roles, and again, we'll be able to see these patterns in many places. Now, another pattern or candles that you should try to trade with, okay, that can help you trade, are reversal candles. For example, pin bars or inside bars or outside bars. We'll look at some of them right now. And again, you can see here a strong area of resistance around here and another area of resistance or hesitation around here. Okay, all these areas are areas of support and resistance and hesitation. And let me just take it a little bit backwards. You can see here that the price, okay, breached and hesitated a little bit around this area, this line, and then went back again. And we see another hesitation here. We see another hesitation here. Okay, all this area. So we see candles going up and down and up and down, and we know that this whole area is an area of, you know, of action between sellers and buyers, of war, of hesitation. And we know that this, the upper line, okay, I'll color it in a different color, okay, this this blue line was strong resistance, okay, with strong resistance. So we can expect the action around this area once it's breached. For example, again, reversal from support or from resistance, in this case to support around here. This action here gives you, or this movement here gives you in 3 hours about 60 something pips. But if you weren't sure about this area, you can still look for reversal candles, and this candle here with this long wick, okay, closing above these candles, okay, even let's see above here, okay, we can see all these candles here. Okay, so we have a reversal candle and we have a resistance area. Okay, let me mark it here. We have this resistance area with 1, 2, 3, 4 candles closing below this resistance area, and then a strong bullish candle of about 50 pips breaching this this whole resistance area. Okay, now again, once we have the price coming back to this area and giving us a reversal candle, okay, you may expect again another movement, another price action. You don't have to enter exactly when the candle closes. You have several options, okay, and I'll give you somewhere between 2 and 3 options. It depends on how much you're aggressive or how much you're patient. The first option, which is a bit more, I would say, it's less aggressive. It's and it requires more patience, and you, of course, you may miss the opportunity. But one option is to set a sell, in this example, a buy limit, okay, somewhere in the middle of this candle. Okay, it's a 1 hour candle. You say, okay, maybe it'll go down again a little bit and then push a bit higher. And I don't want to enter exactly here because it still may go down. And I'm more conservative, then maybe I will set my my buy limit somewhere around the middle of the candle, maybe a bit higher because we still have to take the spread once the price goes down. But around here we may set a buy limit in case it goes down and then up again, and trying to, if the price tries again to close above the support area, in this case the support or resistance area previously, and I set the stop loss a little bit below the candle. Okay, and in this case I have something like only let's say a 15 pip stop loss. Okay, so it's pretty much conservative. It's I'm not risking a lot, and if I think that the price, okay, may reach this resistance area, somewhere like that, then I take somewhere, let's say 20 to 25 pips. Okay, that's my first destination. So it's more or less I'm risking just over half of what I'm I may win. Okay, so it's a nice risk-reward ratio, and that's the first option. Second option, if you're more aggressive, okay, you may say, okay, this is a reversal candle. There's a long wick here. I see here that it closed above the resistance area, and I want to enter here just where the candle closed, and I'm expecting some movement, okay, and I'm setting the stop loss again below the low of this the previous candle, okay, below the wick. So my stop loss is a bit longer, but I may be you know, I don't want to miss the opportunity of the price going up and you know, without me. Okay, so I'm a little bit less patient, or maybe I'm a bit more aggressive, or I'm willing to maybe risk a few more pips and open a smaller trade. In this case, I will just enter at the opening of the next candle. Okay, this candle. The last option, if you want, if you're again more conservative and you're more patient, but you don't want to miss the price going up, and you're willing to lose a few more pips, then you can just set a buy stop, okay, a pending order again, but not in this case, not a buy limit under the close, but a buy stop above the high of the candle, let's say a few pips above, let's say about 5 or 6. Again, you have to take into account the spread itself, but I will set a buy stop, a pending order above the high, a few pips above the high of this candle, this reversal candle, and I say, okay, if it starts going up, it'll probably continue going up a little bit more. I don't know exactly how much, but I see here that there was strong demand. Okay, a candle here went up 50 pips, and again, it went down and up again like 60 pips. So I know there is strong demand now around this area. I may find strong demand again around here, especially because this was a strong resistance area that has been breached. Okay, so I may find this price may go up a few dozens of pips. So I don't care about losing a few pips and just entering with a buy stop order, and obviously the stop loss again is somewhere below the previous candle. So this is another way of trading price action with reversal candles, and you can see these reversal candles in many areas. Let's say, you know what, let's look for a few more reversal candles like the pin bars. Okay, and again, some of them may give you a few more pips, some of them may give you some may give you many pips, some may give you just a few. Here again, you can see some hesitation and reversal. I don't know, I don't know how further back the support area goes, but again, if I see here a resistance support area, and oops, sorry, just okay, if I see here a support area and I see reversal candles around here, I can look for an optional buy option, an optional buy trade again after this reversal candle. This reversal candle was a bit more a bit more violent, okay, because you see here wicks on both sides. It's like a spinning top on the bottom, and such candles, such hesitation candles, okay, again with a few more candles before it with some wicks, they show us hesitation and possible reversal. Again, entering maybe just somewhere in the middle of the previous wick, or just when the candle closes, or above. But in this case, it's a strong downtrend, and it's not like entering after a role reversal of support and resistance. So entering here is a bit more dangerous. Okay, let me read some of the questions here. Okay, so Radhika, thank you. I'll go over some of the currency pairs like the euro and the pound, and just before the end of the session, okay, in about 15 minutes or so. And you want me to enlighten about the Fibonacci, okay? Okay, I'll talk about it a little bit. Okay, so Morale, you're asking about the stop loss and take profit. What are the stop loss and take profit? Okay, so again, regarding the stop loss, I explained where usually if you're looking for reversal areas or for reversal candles, you usually set the stop loss just below if it's a long trade, just below the candle. The candle is weak or the candle is low. If it's for short, you place it above. Especially if you have, again, support and resistance changing roles. Regarding the take profit, now regarding the take profit, you have several options. Again, if you're monitoring the chart and you think that your take profit, you want to set a long take profit or a distant take profit, and then close the chart if you're feeling that the price is not going your way, and that's one option. But if you want to set the take profit and leave the screen, I would look at several options. First of all, obviously the closer resistance areas. Okay, so in this case, if I enter long somewhere here, the closest resistance area is just the lows, or the previous lows or the previous bottoms before this support line was breached or was broken. Another option is obviously to look at some trend lines. Okay, so you know here that you have the price going up. You don't know how fast it will go up. Okay, it may go up in one candle and then it's 50 pips. It may go up in two candles and then it's 40 pips. It may take three candles and then it's less than 40 pips. And if it takes it 4 or 5 or 6 candles, then it may be only 30 pips or 20 pips, okay? So with trend lines, it's a bit more difficult to know exactly where the price will stop, and that's why support and resistance areas are easier. But what you can try to see is, for example, where Fibonacci levels converge with these areas, okay? With these areas, for example, here. I can think of, okay, maybe the price will go up from here all the way to the 76 Fibonacci level, but maybe it'll stop around the 61. Okay, this area looks more likely because if these are late hours and at night, and the price may slow down price movement, then maybe it'll take it a few hours until it will go up, and I don't want to be too greedy. And you see here that the 61 Fibonacci level also converges with the previous low, okay, with the support level, and around here with the trend line, okay, of these two highs, so of the previous two highs. So again, I would probably set the take profit around here, okay, thinking that it'll stop somewhere around the next low and the previous low and the 61 Fibonacci levels. Okay, so always look for areas where you have several resistances or several support levels, and there you may find a better place to close. Okay, with trend lines, again, you can't know for sure where it'll stop. So I would probably say, okay, if I enter exactly here, okay, just where the previous candle closed, the reversal candle closed, and I enter here, then I may, get around 30 pips, okay, after spread, and risk around 20 pips. Okay, so it's okay. It's 1 to 1.5 risk reward ratio, which is okay. And in the other example, okay, where we saw this reversal candle, for example, so we were talking about, let's say, somewhere between 15 and 20 pip, 15 and 20 pip stop loss, and where to expect take profit or resistance. So again, we said something around here where there was strong support. Okay, that may be first resistance. Another resistance, okay, or maybe it even converges with the Fibonacci level. You can see here, okay, it's a 50 Fibonacci level, so I would expect the first resistance to be around here. And then I say, okay, if I enter, I take something like 30 pips. 30 pips are okay for 20 pip stop loss or a bit less. So 30 pips are okay, and I'll take my profit around here. Obviously, you see here that this candle showed some hesitation, but eventually it did keep going up, okay, all the way to the previous top, which is also an option, okay, but that's less likely unless you're really in a strong uptrend. Okay, in this case, the general trend is somewhere between a downtrend and a sideways trend, so sideways. So if you're more careful, you would probably set a take profit a bit closer. If you know that the price still has some more potential, or if you're sitting in front of the graph and you don't want to set your take profit in advance, so you can always close some of the trade, or close the trade partially around this area, okay, the 50 Fibonacci and the support area, and then move your stop loss higher and let the trade run a little bit further up. Okay, so this is regarding setting the take profit, or where to set the take profit, where the potential take profit is. Again, price action is something, it's very powerful. As you can see here, you don't have to use any indicators. You can always look for areas where there's strong support here. Okay, there's strong support that turned into resistance, and at least for one more time, you may see the price react to these areas. And again, you don't have to hurry and enter exactly at when the price reaches this area. It'll probably give you another chance, or at least you can wait for the close of the candle to see whether the price really reacts to this area. Okay, and you can see here that entering around, okay, where this candle closed, or just very close to this resistance area, okay, these are ridiculous stop losses, okay, really close, like somewhere between 15 and 20 pips. That's not much, and the reward can be significant. Okay, again, if you're patient, if you know that the euro dollar is weak, or you know that generally you're in a downtrend, you can really take tons of pips, okay, risking 18, 20 pips and taking somewhere between 40, 50 and 80 or 90 pips. That's really classic, okay, and that's all thanks to just simple price action, support and resistance, looking at the candles, looking at the strength, okay, the strength of the reaction. If you see here, there's a line here, there's a resistance area, and the price reacts really strongly, okay, with a strong wick, okay, with a long, strong wick. Here too, okay, you have really again, strong reactions. Okay, strong reactions lead to strong price action. Strong reactions, long wicks around the support or resistance areas will probably for at least one more time give you a reaction. Okay, and here again you can see at the bottom here, again it's not, well, I guess it's not here. There's a false breakout again. Okay, you can see here this false breakout and then this gap. But basically, if you're looking at these support and resistance areas, you can see strong actions. Okay, strong or long wick here. Here hesitation and a strong gap. So we know there's around this area there was a lot of demand. Eventually there was a lot of demand. Okay, because just as the trading opened in the Far East before Forex Base started its servers, already there was strong demand here. If there's strong demand here and here, probably at least one more time. Okay, and here we can see a reversal candle. At least one more time, we can expect some movement. Okay, and again, you can't know for sure it'll happen, but if you're around the resistance or support area, you don't have to risk a lot. Okay, because these wicks, especially on the 1 hour chart, 15-minute chart, these wicks are not very long. So setting a stop loss of 20 pips, okay, and taking a profit, again, you don't know how much exactly, but let's say you're expecting it to go at least this high, okay, or to this area. Then you know that okay, if I enter here, I have somewhere between 25 and 45 pips. Okay, that's good for risking just some, let's say somewhere between, okay, let's say 20 pips. Okay, so if I'm aggressive, I'll take it and say I'm willing to risk 20 pips in order to take 20 pips. Okay, 1-to-1 ratio, or maybe I'll even more. Okay, maybe if there's such a strong demand here, okay, this gap here is awesome. If I have such a strong demand here, I may find the price going up even more than I think. In this case, it's worth it. And before I review the market a little bit more, let's just talk a bit about what's that? Okay, let's talk a little bit about indicators that may help you in divergences, and may help you finding strong resistances or support with I would usually use the stochastic here, especially if you're trading short-term trades. You know what? Okay, let me just add the stochastic. I'm using the 333 or 533. It doesn't matter. Either of them. I mean, if I want something to react fast or quickly to the chart, I would probably use the 333 stochastic. Okay, and I will be looking for divergences, okay, in these support or resistance areas. So, for example, if okay, in this case, there isn't much of a divergence here. Let me see. Okay. Okay. They will probably, okay, you will probably find here there's a nice price action, and I'm trying to see, okay, there's a nice divergence here, although it's a bit, well, it's a strong divergence, but okay, price action around here, okay, around here, there was strong support here. You can see the long wick, and then again you see support once and twice, and you can see here that this double bottom here gave us divergence here. Okay, we see a double bottom here, but the lows are going higher. Okay, so this divergence may give us a better indication of of a reversal, at least some reversal. Okay, and again, how much, it depends, but it may stop somewhere around the trend line. It may stop somewhere around this resistance area, which was support or so. But again, divergence may help us here. Okay, let's look for more price actions on other charts. For example, on the 15-minute chart, okay, price action maybe with divergences. And again, you don't have to use indicators. You really don't have to, but sometimes they may help you. Okay, so I see here, for example, I see here this strong support area, okay, after the gap. And I see long wicks here, but not only do I see wicks, I see here, although these lows go lower, I see here the lows on the stochastic going higher. Okay, I don't know if the MACD, no, okay, the MACD again, because it's a slow indicator, it usually doesn't show the divergences on the shorter time frames. Okay, sometimes it does, but not always. But here I see a divergence, I see support area, I see long wicks. In this case, 30 pips. Okay, it's a 15-minute chart, so don't expect a lot, but still, you may find some pips, some extra pips in these trades. And obviously, okay, again, if you're aggressive, okay, and you see this support line after it has supported the price for several times, like I told you, like once or twice, not more than that. Don't try to enter after the line has served as support or resistance for more than twice or 3 times. Okay, and usually and eventually, okay, the demand around this area goes away, disappears, and sellers find more. There's more supply than demand, and eventually the price closes below the support line. Okay, you can see here it didn't close below along this whole day, during this whole day, and now when it finally closed below the price, okay, then you can see the price going down, and those of you who are a bit more aggressive may enter just as the price closed below it. Okay, it sometimes may be a false breakout or a false breach, it depends, but if you do see a candle that eventually closes below, in this case a 15-minute candle, you can expect some movement, in this case a 20 pip movement, to where probably to close the gap or to some previous low. Okay, and again, we talked about false breakouts and about the power. So if you see here, okay, if you see here that the buyers, that the sellers are stronger, okay, and it starts going down. Let's say you entered here, okay, and I would probably enter here because I say, okay, the support area or this support line was broken, and now it serves as resistance. There are some hesitation candles, and then I take short. Okay, in this case, going short here would probably take me out in a small loss or break even, or if I'm really, you know what, yeah, probably a small loss. Okay, if I see the candle close above above the price again. In this case, if I see that the sellers were not strong enough, okay, sorry, if I see that the sellers were not strong enough, I would, okay, look for the other direction. Let's say the sellers are not strong enough, the buyers regain control, okay. I see these candles, these reversal candles, these long wicks, then probably, okay, if I see this for several candles, I would probably look again to go long. In this case, it's a nice long. But always look for who is in control around these areas, okay? And even if you entered short here, which would probably, I would probably do it, okay? Because I see here support turning to resistance. I see here higher highs and lower highs on the stochastic, so I have confirmation from the indicator. All these together don't, you see, don't eventually give me what I expected, and I would probably exit here with a small loss and maybe even look for a long position. Okay, so price action is all about the action between sellers and buyers. It doesn't work all the time. You can see here it didn't work perfectly well. And if you see signals that give you, or you know, the action goes against you, okay, you see signals that tell you the opposite of what you think of what happened just before, don't lock on your trade. Close it in a small loss, and you will probably find a better opportunity to not only give you back your losses, but also give you much more than that. Yeah. So Murali. Yeah. Okay. You. I don't know if you wrote me some. Okay. Yeah. Maybe you didn't hear me. All right. Now, this is basically, you know, a simple explanation of price action. We'll see more examples in the next webinars, and tomorrow I will try to show you online some price action trades, and maybe we'll use some of the strategies. Okay, we'll try to open some several charts in parallel and see on each trading system or strategy how we can act on the chart online. Okay, we'll try to analyze 1 minute or 5 minute charts. As per your questions before regarding the euro dollar, the pound dollar, where they're headed, and what we may expect from these currency pairs. So obviously we can see here that the euro dollar has broken the low of January, and it found, just like we saw earlier, it found resistance around this support area, which now turned to resistance. And today, or this evening, it has broken another low, but I wouldn't enter short right now, and if I were in short positions already, I wouldn't close them. I wouldn't, sorry, if I were for some reason in a long position, I wouldn't close it immediately, because again, the day hasn't ended yet, and we may see the euro dollar, maybe, I don't know, we may see the euro dollar trying to close above this support area. Okay, this support. It's only a matter of somewhere between 20 and 30 pips. That's not a lot. It can still happen in the next 3 or 4 hours, and I can see a hint, just a hint, but again, it's not for sure because the candles haven't closed yet, but I may see a hint of divergence. Okay, we see here lower lows and maybe higher lows on the stochastic, but since this 4-hour candle hasn't closed yet, We cannot know for sure. It can always, go lower, and then this divergence or possible divergence will disappear. On the 1 hour chart, you can see here long wicks. Okay, you can see here this candle that may give us some reversal, maybe. Okay, but again, the euro is very weak. I see here in general, I see the Aussie dollar trying to go up again. Okay, you can see here the Aussie dollar trying to go up from this area. Okay, nice price action here. You can see this beautiful price action again. Okay, support around here, then it broke, and then it turned to resistance around here, all this area, and then support again after the gap. You see how the gap closed right above this resistance area, so it gapped above it. And here a wonderful setup, okay, to enter long. Again, in this case, look how beautiful, like almost 100 pips. Okay, so nice price action, nice reversal candle, and beautiful move up to the previous low, more or less, just a bit higher. And I think the Aussie dollar stopped today on the pivot lines. Okay, those of you who use pivot lines or pivot points, where is it? May find, yeah, you see here the first resistance. Okay, so the Aussie dollar stopped on the first resistance here on the pivot lines. And again, if the Aussie dollar manages to go higher, we may find here a nice reversal, and I think there's also a possible divergence here, maybe. Okay, not on the MACD again. It's going sideways, so the MACD doesn't help us here. But maybe again, if we see here this reversal candle on the 1 hour chart and these lower lows here, while we may see, okay, maybe again, higher lows on the stochastic. Okay, so again, it depends if the price manages to go higher and form a bullish divergence, then maybe, but maybe it's just I don't know, wishful thinking, who knows, if the euro dollar closes higher, if the pound dollar closes higher, okay, all these, if they manage to close above, okay, the support area, the previous lows, and eventually not end the day lower, then we may, okay, see a reversal here. I noticed already on Friday possible divergences on the daily charts. Okay, you can see here lower lows on the daily chart and higher. Okay, on the stochastic you can see here higher lows. Let me put this here. Okay, you can see higher lows on the stochastic on the daily chart. Okay, but again, we know that this area here on the pound dollar was strong support area. Okay, so we may find again support around here. Maybe it's the beginning of a reversal after such a long move down of about 700 pips with no retracement, with no corrective move. Okay, so this may be the start of, in this area, the start of some corrective move, of some retracement. But again, with the markets in panic about Europe and closing lower and lower and making lower lows, unless I see these currency pairs, okay, these instruments like the euro dollar, like the pound dollar, if they don't manage to close above these lines tonight or tomorrow, then we may see a further decline in their prices. Okay, so I hope the simple explanation about price action and what to look for. And again, you don't see here anything except for a few lines, but just the naked chart. Okay, I hope these will make you look at the charts in a bit more simple and easier way, and will help you trade better and to gain more confidence with these crazy markets. Okay, and again, remember, the best place to look for are reversal of like roll change. Okay, a reversal of support and resistance areas. Usually they work very well, and or if a support or resistance line are broken, okay, then you can expect to go with the trend, okay, with the trend again, in safer trades, and just be patient, okay, just look, wait for the signals, wait for the price to come to you, okay. You know that this area is support that was broken, and it may come back after a few hours, after a week. Just wait for it to come back, okay? If you find other opportunities in the meantime, obviously take them. But if you're looking for safe trades and you know that this area may serve as resistance or as support, whatever, just wait for the price to come to this area and give you good trades with minimal stop losses. Okay, so again, tomorrow morning we'll open some, we'll try to look for some online opportunities with, just as for examples, okay, just to see examples of some strategies we went through in the last couple of weeks. On 1 minute and 5 minute charts, maybe we'll see even longer time frame opportunities, okay? Thank you very much. Oh, by the way, okay, 125.74, 124. One more question here, just okay. You asked something about the retracement of the Fibonacci level from I guess it's on the euro dollar, 125.74. Around here to 124.74 or something like that. I don't know exactly what you want to see, but again, if you're looking for retracement, so obviously you can see here that this whole support area around here is around the 38 Fibonacci level. Okay, so it has some resistance levels here, some strong resistance levels. There's nothing much to enlighten, okay? I mean, just if you're looking for short trades, then probably around here you may find some short movement, unless really the market, or I don't know, the buyers will really try hard to close the day above this the previous low, okay? You took long and your take profit is 125.05, which is the 238 Fibonacci level, 125.05. Yeah, if you took long, I would, yeah, setting the take profit around here. Even I would probably even set if you're more cautious, you would probably even set the take profit around 125, more or less, okay? Because there will probably be many orders around this round number, okay? 125 is a psychological number. I'm not saying it cannot go higher or above it, but if you want to be on the safe side, then setting the take profit around 125 is a bit safer than 125.05, okay? Although again, it will, if it reaches 125, it may just as well go a few pips higher. All right. When again? Next morning. Thank you. Yeah, so we'll see you next morning. Thank you very much all for attending. And if you have any questions, please, you're welcome to write them down or send them to my email. or ask them in the next sessions too. Yeah, my email yanko.fix@gmail.com. Okay, just let me. Here. Okay. So this is my email, and again, have well, good luck with your trading, and thank you all for attending, and see you tomorrow or next week. Goodbye.